According to recent research, highly likely that Tesla stock will reach 400 this summer. However, before we jump to conclusions, it's important to investigate and determine whether this information holds any merit or if it's simply based on speculation. Tonight, we'll delve into the charts with the guidance of Larry Williams, a legendary technician and market historian who has been an expert in the field for longer than I've been able to drive. Let's see what he has to say. But before Larry is currently feeling bullish about the broader market. But let's concentrate on one particular stop. Larry has an amazing track record of correctly predicting key market movements such as the bottom during the COVID-19 pandemic and the January rebound earlier this year. Tesla is a subject that I'm sure you'll all find fascinating. However, before we get into Larry Williams' viewpoint, let's take a closer look at him. He started with $10,000. Larry became the 1987 World Cup champion in futures trading and made an incredible $1 million in a single year. Although Larry doesn't dispute this, he has a more optimistic outlook for Tesla stock. It's important to note that electric vehicles and rocket science are two different things. What's even more remarkable is that his daughter, Michelle, also won the same contest a decade. Larry's achievements speak volumes about his expertise and credibility. Now, at Tuesday's annual meeting, Elon Musk cautioned that the next 12 months would present challenges for Tesla due to global economic weakness. Let's look at the chart. Today, Larry thinks that Tesla has a lot of potential in the stock market. Larry Williams always examines previous mental processes to find recurrent cycles. Tesla exhibits both an intermediate term cycle and a long-term cycle. One especially notable cycle, shown in blue, spans 42 months and has continuously had a major impact on the stock's highs and lows since its inception. This pattern is extremely significant because the long-term cycles are currently showing a positive trend, with the line interestingly pointing upward towards the end of last year. Tesla's fall came to a stop in perfect accordance with past patterns, indicating that the stock may continue to rise well into the second quarter of the ensuing year. A seasoned industry expert, Larry tells investors not to worry about the next year and instead to take advantage of buying chances when the market is down. This approach supports the idea that the trajectory of equities is expected to stay upward for the foreseeable future, although it's crucial to use caution during notable rises. Larry says it can be wise to cut back on an investment during significant increases in the stock. This strategy aids in reducing the possible hazards of overexposure during times of increased volatility. Long-term cycle analysis offers insightful information about Tesla's performance. The long-term cycle is currently trending upward, and historical patterns suggest a positive future for the stock. Investors can position themselves to take advantage of Texas potential growth in the upcoming months by strategically investing in market dips and being cautious during large rallies. Moving forward, let us tackle the most frequently asked question: is this upward trend sustainable? Any conclusions? Let us give Larry a chance to explain. He was remarkably accurate in predicting Netflix performance, and he has similar intuition about Tesla. He encourages investors to follow their instincts because, on average, they account for the 1.5% annual underperformance of average individual investors in the market index. While active traders underperform by 6.5% annually, according to Trade Society statistics from 2000. When it comes to investing, the wise ones tell us to put aside our feelings and rely only on reason and data. They stress how crucial it is to take a step back and thoroughly assess the situation before making any financial decisions. In the volatile and fast-paced world of stocks and investments, it's preferable to withstand a little emotional setback than to suffer large financial losses. Kramer, a perceptive person who approaches the market with a healthy dosage of skepticism, finds resonance with this feeling. As he learns more about the present situation surrounding Tesla, his doubts and concerns start to materialize. While some might be enthralled with the excitement surrounding the latest advancements made by the firm, Kramer is nevertheless cautious, preferring to examine the circumstances critically and logically. When Kramer looks at the direction that Tesla is going, he doesn't let short-lived trends or public opinion influence him. Instead, he looks for strong evidence and credible data to support his conclusions. As he digs deeper into his research, he starts to doubt whether Tesla's trajectory will be sustainable in the long run. Kramer's approach is based on a desire for accuracy and clarity rather than a personal grudge against the company or its founder. He is aware that acting only on feelings can cloud judgment and possibly result in unfavorable outcomes. Therefore, he critically evaluates the information at hand and takes into account multiple viewpoints in order to make well-informed decisions. That will hold up over time. However, he brings up an interesting concept known as the intermediate term cycle, which has historically led to the valuation of Tesla at 80 of its current price from now until early September. Kramer finds the data intriguing and believes it presents a good possibility, even though he is unable to explain why these cycles take place or why they result in profitable contracts. In order to bolster his optimism, he cites Larry's stellar performance in dependable data as proof that there is an 80 likelihood that Tesla stock will begin a significant rally that might reach about 400 by July. Kramer shows a weekly Tesla chart that highlights an indicator created by Williams to track the purchase of mutual funds and hedge funds. According to this indicator, these money managers have a track record of purchasing Tesla shares right before market rallies. The recent aggressive purchase of Tesla shares over the past 4 months suggests that, contrary to popular belief, they have been correcting their actions. This accumulation suggests that the stock is getting ready for a significant upward movement. Although there have been some instances where the indicator has not accurately predicted Tesla's short-term performance, there is still some correlation to take into account. Kramer concedes that professional accumulation during market falls is supported by the daily chart, which also includes the institutional money management indicator. In order to purchase additional shares of Tesla before its stock gains diminish, money managers have continuously hung on to the company during its worst times. Williams also noted that Tesla's seasonal cycle fits the current circumstances well. Interestingly, although the stock only increased by about 10 during that time, Kramer highlights Ross Gerber's recent trade in which he sold Tesla on April 24 and then bought it back. What catches Kramer's attention, though, is Larry Williams, who is 80 years old, and if he truly possesses exceptional trading skills, he would likely be a billionaire by now, according to his website. Williams says he traded equities in 1970 and made his first $1 million using an investment calculator with a 14% yearly return. $1 million would have grown to $1 billion between 1970 and 2023. For an experienced trader, this amount might not seem significant, but if we raise the return to 20%, as Warren Buffett has done, the numbers become even more amazing, reaching $15 billion today. This is why I'm on a mission to find out more about them. Little information can be found with a fast search. The only notable finding is his estimated net worth, which is approximately $5 million. And this begs the question, if he really has such great trading skills, why doesn't he have a fund or any tangible proof of his success? Even though his website doesn't provide any historical returns, it does highlight that he's been trading for an impressive 57 years, which is commendable, but it doesn't offer any concrete evidence of his accomplishments. Visiting his website only serves to heighten the mystery. Although he may be a fantastic person, I don't feel confident enough to believe his research because my preliminary investigation didn't turn up any noteworthy accomplishments. I may be missing something important about this person, and if so, I encourage you to share your thoughts in the comment section below. At this time, I can't place much weight on the research. We'd love to talk more with you, but we have to cut this video here if you want to see more. Make sure to like this video to toggle YouTube's algorithm. Make sure to subscribe to Tesla Stock News as well. Beyond a single instance of turning $10,000 into $1 million, these achievements, if they exist, remain hidden from public view.